How high will food prices go? The other day I went into the grocery store. I don't do the shopping most of the time, but I went to the grocery store because Rebecca asked me to pick up some salad dressing. And the salad dressing was $4.50 to $6.50 on average. And I was just in a regular grocery store. And I remember salad dressing being about $1.50, maybe $2.50. A gallon of milk was like $4 something. Prices are going up everywhere. That's going to be the number one thing we talk about today. Our main topic of conversation will be inflation. Consumer price inflation. What's happening? But before we jump into that, let's take a look at the market. Welcome to the Morning Brew. Block Thrasher Morning Brew on this Thursday, July 29th. It's 8:13 a.m. It's a beautiful day. It's raining where I am here near Sheridan, Wyoming. I tell you something, I have never seen so many incredible deer, so many incredible bucks with massive racks as I've seen here. Anyway, that has nothing to do with what we're going to talk about today. Looking at the market, the total market cap is up 1% to $1.6 trillion. Bitcoin dominance is 46.6%, and Ethereum is at 16.9. Gas prices are relatively low at 28 GWAY. The Bitcoin dominance of 46% tells me that it's possible that it's likely that altcoins, if this recovery continues, altcoins are set to explode. Bitcoin is up 23.2% on the week, up 0.3% in the last hour to $39,892. Ethereum is up 1% in the last hour, up 1.8% in the last 24 to $2,318. Binance up 0.7% in the last 24 to $314. Cardano, no change at all, still up 8.8% on the week, but no change in the last 24 hours, $1.28. XRP up 23.6% on the week, up 0.4% in the last 24 to 70 cents. Dogecoin is 20 cents. Polkadot is 14.86. Uniswap is up 3.9% on the day, 19.46. Litecoin is 139.50. Chainlink is $19. Solana 28.37. Polygon 101. Everything's up. Everything is in the green. Very little change in the last 24 hours, with Polkadot being an exception, Dogecoin just a little bit, and Ethereum. Everything else is pretty much holding steady, but looking good on the week. The news is also good. Here's some good news. Every time we see a story about PayPal, it seems really, really positive, because obviously PayPal is massively huge and widely used, and it's a moniker, an indicator of adoption. However, there always is a caveat to that here. But looking at this, PayPal President and CEO Dan Schulman has issued new details about the payment giant's Bitcoin and cryptocurrencies expansion. They promised this way back in February, but they're saying that they're going to expand their Bitcoin buying to the UK. But here's the caveat. They're still silent on whether or not they're going to introduce the ability for customers to actually withdraw their cryptocurrency. Because currently, whether it be in PayPal or in Venmo, you're not able to do that. So basically what you're purchasing is an IOU. So we'll see if they do that. Good news overall. There is promise, though. The CEO Dan Schulman did mention something about a super wallet or a super app that they're going to initially release in the United States for US customers only, and then roll out worldwide, but that will add additional crypto features. So we'll see if that ends up including the ability to actually hold custody of your own crypto and withdraw it or not. State Street, moving on to the next segment. State Street is going to start offering crypto services to their private funds clients following Bitcoin adoption on Wall Street. State Street is one of the largest banking holding companies in the U.S. The corporation is going to become partners with Luca Inc., which will provide crypto software for fund administration services. Luca Inc. will be providing data that will support the fund's valuation services. State Street is administering more than $40 trillion of assets, becoming one of the largest custodians in the world. Good news. More adoption. Is this bullish to $2.8 billion in Bitcoin leaves the exchanges. It's the largest outflow since November of 2020. Following a bearish couple of weeks, institutional investors are returning to cryptocurrencies, with approximately $2.8 billion in Bitcoin being moved off cryptocurrency exchanges. The balance of Bitcoin exchanges fell, according to blockchain data provider Glassnode, by 70,328 Bitcoin. This is the most significant exchange net outflow since November 2020. With 70,328 Bitcoin leaving exchanges in a single day, it indicates demand resumes as Bitcoin tests the top limit of its trading range once more. So we've got some good analysis indicating that the Bitcoin price is starting to see a little bit of a squeeze, and we might see some prices go. We might see this thing continue to turn around and move upward. However, there's one bigger issue, one macro issue, which is what I made reference to in the introduction today, and I think it's something that's more relevant to actually look at, and that is what is going on here in the U.S. with the economy, with employment, with interest rates, with inflation, and the Federal Reserve. Recently, the Federal Reserve had a press conference, and people are saying it's one of the most confusing press conferences ever. Cointelegraph actually did a really fantastic job of covering this, and so this is coming from Cointelegraph.com. We're going to read through this and talk about it a little bit. Bitcoin struggles at 40K after most confusing Jerome Powell press conference. The Federal Reserve chairman had to explain what he meant by the term transitory inflation, as he admitted that consumer prices have gone higher than he and other central bank officials had anticipated. Oops! You don't say! Increasing the money base by 70% and constant quantitative easing and purchasing of mortgage-backed securities and other toxic assets and tons and tons and tons and tons of stimulus as a response to COVID. You don't think all of that might lead to a little bit of consumer price inflation? The Federal Reserve chairman had to explain what he meant by the term transitory inflation, as he admitted that consumer prices have gone higher than he and other central bank officials had anticipated. Bitcoin rose above 40,000 on Thursday, a day after the Federal Reserve hinted that it was getting nearer to unwind its asset purchasing program that has boosted the United States' economic recovery. Listen. That's bullcrap, in my humble opinion. They're not going to unwind their asset purchasing program anytime soon. The benchmark cryptocurrency approached 41,000 in the previous session, ahead of the critical Fed update. Nonetheless, it started losing upside momentum after the Federal Open Market Committee, the FOMC, released its policy statement, followed by a press conference helmed by the Fed Chairman Jerome Powell. You know, it's interesting because now this analyst and this is citing this issue of this Federal Reserve meeting. Well, at the same time, all that silliness was going on about Amazon potentially accepting crypto as a payment or for payments, and then saying no, and people were looking to that at that time as the driver, and other people saying no, that has nothing to do with it. Anyway, as economists had expected, Fed officials left their monetary policy unchanged. Ding! Surprise, surprise, no surprise. No surprise. As I stated, they're not gonna stop. They're not gonna unwind. This is not gonna happen now. No. As economists had expected, Fed officials left their monetary policy unchanged at the end of their two-day policy meeting. They noted that the U.S. economy has advanced higher towards its maximum employment and inflation goals, and that the Fed would continue to evaluate its stimulus policy in the coming months. It's interesting. Everywhere you go, and I'm out a lot, travel a lot in different states, as you all know, quite frequently of late. People can't get people to work, and they're hiring everywhere. There's no issue with jobs. Well, there may be an issue with good paying jobs, but at least at the lower level, the service industry level, there's tons of work. and no people to fill those positions. It's just anecdotal, but Bitcoin investors have been closely monitoring how soon the central bank might unwind its $120 billion per month bond buying program. That is partly because of the benchmark cryptocurrency's 4,000 to 65,000 bull run against the Fed's loose monetary policies. To inflation or not to inflation. So here's the thing. We're going to read through the rest of this because there's more detail and Powell has more to say. But something this doesn't address on a macro level that I'm looking at is you may or may not have heard about, you may be aware of the fact that the CDC has been flip-flopping on this whole COVID thing, right? And just the other day, apparently, they released some information, and then USA Today had written an article about it, which they then immediately scrubbed, but said something to the effect that people who've been vaccinated may be more contagious than people who have not been, and might be spreading COVID, right? And there's this Delta issue. And so they were advising that people put on masks while inside, even those who've been vaccinated. And in California and maybe a few other places went back to mask mandates. A whole bunch of Republican governors from different states around the country, DeSantis in Florida what's the Texas? Abbott in Texas, and Nome in South Dakota, and a number of others said, no, we're not going to do that, right? Because the CDC keeps flip-flopping and going back and forth and on what they're saying. Here's the thing. Here's the point. Oh, and the Biden administration came out and they're talking about a new mask mandate, national mask mandate. I would not be surprised if we see also some places return to lockdown. And here's where that becomes important. Here's a couple of things. I think that they know. All right. This is going to get a little bit into like conspiracy theory type talk. And I recognize that. So I'm saying this is conjecture, okay? I'm saying this is a possibility that came to my mind that I think could be. I'm not saying I'm certain of this or declaring anything. I'm just saying they could know that we're screwed, blued, and tattooed. Inflation is getting out of control. The economy has seen this boost because of all of the stimulus and all of the printing of money and of the purchasing of toxic acids, et cetera, et cetera. However, they know that things are, and they need an escape. They need an excuse. They need a justification for it. And a return to lockdown, a return to gives the justification to continue, not to only continue, but to increase the stimulus and the expansion of the monetary system and the spending, and to justify a lack of good, positive economic numbers of employment, things like that, right? So all I'm saying, what I'm saying is, I don't believe that I just don't trust them. I don't trust them. I don't trust the Biden administration. I don't trust the government. I don't trust California state. I don't trust any of it, right? And they need a scapegoat. And the scapegoat could be COVID. And it could be more lockdowns. It could be more masking. We'll see. We'll see. But if that happens, I can assure you that it's going to be very negative for the economy. It's going to be negative for employment. And it's going to cause more action from the Fed, more action from the federal government. And we're going to see even worse. I mean, I'm starting to really, truly get concerned that food prices could get out of control. So, I've been thinking this might be the time to also stack some canned foods. Now, I'm not saying go crazy and hoard. Well, it's kind of like dollar cost average. Don't go down to the grocery store and empty the shelves out and panic like happens when everybody starts to go suddenly, like all the people that have normalcy bias to think everything's going to remain the same forever, suddenly go, holy crap, I might not be able to get toilet paper. Just imagine if that was with food items. Holy crap, I'm not going to be able to get milk. I'm not going to be able to get eggs. I'm not going to be able to get bacon. I'm not going to be able to get canned foods. but dollar cost averaging, dollar food at whatever you want to call it, little here, little here, little here, little here, and just have something, right? 3 to 6 months or a year. Back to this article. Powell had earlier said that the asset purchases, the Fed's asset purchases, would continue until they see substantial further progress in economic recovery. But Wednesday's presser was the first time the Fed had to explain how it perceived substantial further progress. CNBC's Steve Leisman put the said question before Powell, to which he responded that it means strong labor numbers and progress towards maximum employment. So that's what they're looking at: strong labor numbers and maximum employment. Not so much, they're not concerned about inflation. We're going to see it here a little bit more. Follow-up questions by reporters stressed Powell into explaining transitory, a term he and his office has repeatedly used in their previous FOMC statements to sideline concerns about the rising inflation in the U.S. Yeah, this is how they're explaining away the rising inflation. They're saying, it's transitory. Powell took at least 2 minutes to address the sudden line of inquiry, noting that inflation will rise short term, but it won't rise year over year. Oh, really? Here's what he said. The consumer price increases will happen. We're not saying they will reverse. So there will be inflation, but its process will stop. If it doesn't affect longer-term inflation expectations, then it's very likely not to impact the process of inflation going forward. What I mean by transitory is that it does not leave a permanent mark on inflation process. This is doublespeak. This is like, there's going to be inflation, but it's not long-term inflation, which means it's not going to continue to rise at that same rate, we don't think. Therefore, it's not really inflation. Don't worry about it. Don't bother. Scott Skirm, Executive Vice President in Fixed Income at Repo at Curvature Securities, noted that the FOMC statement mentioned the term inflation or price stability 10 times. That showed that rising consumer prices are in the back of their mind, even though they refute its presence by resorting to the word transitory. Lynn Alden, who's brilliant, by the way, and if you're not following Lynn Alden, I would highly suggest you do. The founder of Lynn Alden Investment Strategy said Powell was trying to admit inflation being not transitory in absolute terms, i.e. the Fed chair accepted that their ongoing policies would lead to permanent significant price increases. She added, in his view, inflation is being transitory in the rate of change terms. The year-over-year increases won't stay at this rate. So the rate is transitory, not the fact that there's actual inflation. Alden's statement took cues from one of her recent newsletters. In it, she noted that while the year-over-year inflation wobbled between highs and lows, thereby appearing transitory, the first chart below, still, since the consumer price remained at permanently higher plateau after each inflationary spike, inflation kept rising, as shown in the second chart below. So see, this is why it's inflationary. It's like saying the market's volatile. It's like saying Bitcoin's volatile. Bitcoin's volatile. So it's not a good place to invest. Even though if you look at 2009 to today, there's a $40,000 increase. Well, because of all the ups and downs, the transitory nature of it. Well, it doesn't really increase. It'd be like saying the price doesn't really increase over time when it actually does. You look at the chart here. Those who are only on audio aren't going to be able to see it. But since 1940, all the way up till today, the consumer prices have increased 90%. And it just goes up, up, up. It almost never comes down. Very short periods of time, it'll come down a little bit. But ultimately, overall, it rises significantly. Skirm noted that Powell's style of looking at substantial further progress only as maximum employment, while completely sidelining inflation fears, mean their tapering would respond to improved labor data, not soaring consumer prices. Therefore, if the Delta variants of COVID-19 lead to another round of lockdowns, followed by more stimulus and unemployment benefits, one may not see normalization in the jobs market. This is what I was talking about. That would mean more inflation in the times ahead. I suspect that many may agree that this was one of the most confusing Fed press conferences, said Mohammed El Arian, chief economic advisor at Lanes. Where there may be disagreement is why, particularly the balance between genuine economic uncertainties and what behavioral scientists call active inertia, two deeply wired convictions. Yeah. I'm guessing this is probably what is going to happen. There will be more lockdowns, if not in the U.S. and every state and the bigger cities and states and around the world, and it's going to negatively affect the labor market. It's going to and then it's going to create more inflation. Technically, going back to this article as we just wrap this up here, the cryptocurrency risked correcting lower owing to its overbought relative strength index RSI on a daily time frame chart. An RSI reading above 70 typically limits further upside bids for an asset. Nevertheless, Gustavo de la Torre, business development director at the cryptocurrency exchange InExchange, saw more demand for Bitcoin in the future as Fed ignores inflationary worries. Calling Powell's statements a necessary vocal palliative, the analyst noted that investors would now likely secure their holdings in alternative assets as precautionary steps against consistent rising prices. Bitcoin, he said, is one of the few prominent candidates for this bet by investors. He told Cointelegraph via Telegram, adding that the digital asset's ability to attract retail and institutional investors, even amid its interim bearish phases, speaks loud about its potential to reach a new record high. De La Torre added, a surge back to its all-time high price of $64,000 before year-end is imminent if inflation fears stir investors to stack up the asset. Yeah. I think it's very, very likely. Our word of the day, it was just used in the our article there, is palliate. Palliate. It means to relieve or lessen without curing, mitigate, alleviate, to try to mitigate or conceal the gravity of an offense by excuses, apologies, etc. And that's exactly what's going on here, as De La Torre mentioned with Powell. This was, as he stated, a necessary vocal palliative. He's trying to alleviate, mitigate, lessen the gravity, the significance of the inflationary concerns, and focus on the labor market and the jobs market to try to say, yeah, things are okay and we can continue our path of 120 billion monthly, purchasing of bonds, of mortgage-backed securities, essentially through the quantitative easing and who knows what stimulus they might bring out in the future down the road. So, what does all that mean? The conclusion is inflation is going to continue. It's going to get worse. Food prices are going to continue to go up. And at the same time, so will crypto and other deflationary assets. Gold, inflationary adjusted stocks, real estate. Unless the real estate market has some other shock, such as terminating the previous extension of the Trump administration, the Biden administration's moratorium on the where they disallowed banks from putting people into foreclosure who were in default. Something like that could create such a shock in the real estate market that we could, while we see serious inflationary pressures elsewhere, that market could potentially see a decline. Will that happen? It might not. It might not happen at all. We might continue to see rising prices in real estate as well. But that's a possibility. All right, friends, thank you so much for tuning in. I appreciate you. We're getting close to the end of this week here and the end of this month. I hope you have a great day and tune in tomorrow. I will talk to you then. Press on now. Remember, it's always a great day to earn and stack more crypto.